Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market was mixed to lower this week as investors had some relief that then turned to midweek terror. The market started out okay as Treasury officials came out and said there was no intention to delist China stocks at this time. There are lots of things going on in Congress where they're looking at the listing of Chinese stocks, however. More of that is likely to come into the news. And investors ignored the first sign of weakness as the Chicago PMI came out at 47.1. But news after that was too much and too bad to ignore. What happened shortly after was Tuesday, and the news that came out was bad. First of all, there were two items, and those two items were the ISM, which plunged to 47.8. That says that the manufacturing sector is in contraction, pretty much joining with a lot of horrible numbers coming out of the European area, rest of the world also. So manufacturing slowing down sharply. Then Schwab came out and cut commissions to zero, soon to be followed by the other major brokers, Ameritrade, E-Trade, all going to zero commissions, and that the way to that was led, of course, by Robinhood and Tastyworks and IB and NerdWallet. The brokers basically have all gone to zero commissions, and what that means, and maybe TD Ameritrade is the most greatly affected by this, is that, well, there's no IPO market right now as WeWork has collapsed, and many of the IPOs did horrible this year. There's no interest rates for them to make money on the capital that they're holding, and now there's no commission rate. So no IPOs, no interest rates, no commission rates, no profits. The stocks absolutely collapsed. So between the news of the ISM being so weak and then the brokers just going to pieces, and I'll show you some of that in the worst of the week, the market headed down in a very big way. The market not only gets killed Tuesday, but then on Wednesday the ADP misses with 135,000 jobs created in the private sector, and then the market plunged again. From the high on Tuesday morning to the low on Wednesday, the S&P 500 fell over 115 points. That was a big one. Friday brought a rebound as relief came into the markets. The payroll numbers were exactly the same, 135,000, but the private sector was really weak. So the number's weak, no matter what anybody says. Well, that's if you look at the payrolls. But then the unemployment rate, the U3, comes down to 3.5%. That is a 50-year low, and the markets cheered on that. The anomalous, crazy thing that's going on is that the bond market is moving up sharply, and it's been moving up sharply all week long as there's obvious a move to 1.5% interest rates as being an exciting area for investors to come into, as well. There's nowhere to gain any money the rest of the world, so the bond market has been going up, and you got to wonder what bond investors are really thinking in here. And it has me wondering, of course, whether or not the stock market has got much more rally, which I don't think it does. Friday got helped to the upside, not only by these payroll numbers, but by the Trump mouthpiece. That's Kudlow. He came out and said that Trump is open-minded to next week's negotiations with China over the trade situation. So it was another lie that came out just to help manipulate the markets so that they're not collapsing on President Trump, who is so counting on that being his wild card to say that everything is just great for his reelection. However, when you look at the growth numbers, down around 1.7% for the second half, GDP getting lowered and lowered, that's not good growth. In fact, it's absolutely horrible. When you think about 1.7% growth rate at a time when we have a 1.5% 10-year or a 1.75% Fed fund rate, I mean, there's something awfully weird in here and awfully sick. And with the bond markets continually going up as they are, there's something very strange here. So what I have believed was that October was going to be a bad month for the markets, and that certainly looks like the same is going on. Even though we're getting a little bit of a bump today, that bump doesn't, in my opinion, mean very much. And I'll show you in the short-term view for the coming week that we think that the market will be headed lower. We thought that October was going to be a bad month, late September through early November. We still believe that to be the case. We have showed that we believe that implied volatilities were going to jump very significantly. They have done that, and we think there's more of that to come. And this little bit of relief that we're getting here on Friday, well, I only think it's temporary. Stock market, we'll call it mixed for the week. It was worse. The S&P 500 down less than 1%. The NASDAQ a small gain. A lot of help out of Apple. Now, Apple got a pop a couple times on a recommendation, and then some indication that they had increased the production by as much as 10% for the iPhone 11. We don't know if that's real, but that's the chatter out there. But then the Russell, the smaller cap stocks, they fall 2%. Normally, those stocks would be, well, happy about these low interest rates because they're the most indebted out there. However, there's a lot of weakness in that sector, so we'll see if that's a leading indicator in here. Bond market 30 years up about 2.5 points. 10-year yields fall 15 basis points, and the 1 to 10 year yield curve is inverted still by about 5 basis points, but the 2 to 10 year is pretty steep right now, relatively up at about 14 or 15 basis points. Gold, a very, very choppy week, up about $6 for the week as it comes down and tests our support area that we expected and then had another move back up. The dollar also choppy, loses about 0.2 after hitting our upside target, and we believe that the dollar has topped, and I'll show you more of that at the end of the show also. The oil market that has gotten weaker and weaker after that Saudi Arabia bombing jump. Supplies just keep building. There was a little blip to the upside when it appeared that the U.S. production had come off a little bit, but supply situation is huge. Inventory numbers keep showing builds, and the oil market loses 3.25 for the week. Follow us on Twitter at askSlim, and of course become a YouTube subscriber to our channel. You like this, give us a thumbs up. Got lots more to show you in this show, and we'll be right back. All right, this is the best of the week, and we're going to look at the 5 stocks that had good upside moves, and then we're going to look at the 5 stocks that had some downside moves that were pretty significant, and we're going to start out in Lennar. Of course, Lennar, a home builder, and Lennar has a beautiful pattern. It did pretty much what we expected. I mean, we just read these cycles, and there you go. You can see target zone right up at that point, which comes from this cycle right in here. Now, for those of you that are new, this is a cycle bracket right there. And that cycle bracket is simply a guide. It's a drawing tool that helps us see the rhythms in the market. You can see the low here, how that lines up, the rally, and then the low over here, which is a little bit long, but that's okay. And then, because this is a bullishly configured cycle and a right-hand translation, in other words, it peaked on the right side of the cycle, that said that it's likely to make a higher high above this level, as you can see. And we extrapolate a target zone out of this positive cycle, and you see it gets right up into it. Earnings were strong. Analysts upgrade the stock, and of course, low interest rates have helped this, and other home builders also. It's getting too far up here into this cycle, and having made the target, you can see we anticipate only some minor further advances and then getting some correction in here. But this worked very nicely. For those people that are interested in learning cycle analysis, we are in the final 2 days of our special. It's a 30% off of our normal price. This is a workshop that I put out. Started working on about 4 years ago. It took 2.5 years to write, and then over 6 months to produce 20 video modules. You're never going to look at charts the same, so please take advantage. This is the last 2 days of this special 30% discount for that workshop. You want to get that, you can go to our workshop page, or you can write me at slim@askSlim.com for that special link. So that is Lennar, a beautiful cyclical pattern and very strong moving up. Dillard's moves up, and this stock we think no. So here's the pattern in here that you could see is so clear to us. If you look at the low right over here, you could see the cycle low right there. It's actually a minor and dominant cycle low. You can see that. Now, if you see the minor cycle right in here, notice how I trace that out for you here. The rally with both cycles rallying, and then the minor cycle coming down. When that decline comes so close to this low, it's a negative occurrence. It says that this minor cycle will fail and you'll get another selling wave. You can see you had that exactly. Well, that's where we are right now. This minor cycle rallying after a breakdown, that makes this a sell zone. You can see it's rejecting and having some trouble moving up, and we expect that Dillard's is going to be moving down very significantly again. That we believe to be a sell zone. There's no news. It's just getting some bounce in here, and we think you can sell it. Now, we just showed you Lennar, which is in an area where it seems to have gone too far. Dillard's in an area where it seems to have gone too far. But NVIDIA, NVDA, is a stock that actually looks really good. This is a 2 bullishly configured cycles in a row. So this is the base that built in here after this really big decline. You can see it got to the sell zone and backed off, but it didn't take out this low, so it built the base. Now what happened was it got up in here and then fell off. So you see this cycle right in here is actually quite bullish. It hit this upper support buy zone right over here and now has started to move up. So if I take a little closer look in here, you can see that we've created a fib extension target zone. That takes it up here to about 203.5, 214, 215. Right there, it's now trading at 180. Well, that can be negated by taking out this low, 165. That's about 15 points lower from here. It would take some bad news or a bad market. This is one of the better patterns we're looking at. This is a very, very good pattern, and right now we have to lean very strongly to the positive side. No news in here, but it certainly has bucked the market, and of course the NASDAQ was slightly up this week in a week that was quite choppy. This a specialized semiconductor stock, a very good pattern in there. So it gains 5% on the week, and we're going to say this stock looks pretty good. Lennar up 7%, Dillard's up 5%, NVIDIA up 5%. You can see these are not huge gains overall. Now Roku, ROKU, also gains 5%. But I got to tell you, this is a sick looking stock. after having beautiful pattern right in here and another one right in here. So you can see the clarity on those two exact cycles. Let's just look at these last 4 cycles in here, and you can see the market rhythms in there. Understanding the rhythms of the market is understanding projecting stocks, projecting patterns. And you can see this rising phase right in here brought you a rally, but it's already gotten down here to that low area. Also, you'll note the 34-week moving average coming up, which is often an area of support. This bounce, and maybe a little bit more in here, is doomed to fail. We're looking for the stock to get to 80 or lower in here over this next couple of month period. This stock gets a bullish write-up this week, up 5%, but we think it stinks. The next one we're going to look at of the 5 for the week is CLF, CLF, up 4% on the week. This stock joins the S&P 500 small caps, and that gives it a bit of a lift. You can see the patterns in here. Note the blue dashed line. That is the DBB pattern, and that is the base metals. And you can see how closely it follows base metals. Base metals due to bottom right over here. This stock due to bottom in here. It's testing the low, so that cycle's extending out a little bit. But we think that the bottoming is going to come in here, and the stock is going to move up again towards that sell zone. So the stock is about 740 right now. We project it up to 850 to about $9. Which would be a nice percentage gain. So it's a good vote of confidence when they're putting it in the S&P Small Cap Index, and we think it's a positive opportunity in this stock, certainly in a market that we think has got a lot of downside risk. It's nice to see stocks that can give us some upside potential, NVIDIA being one, and now Cliffs, which I'm not anywhere near as excited about as I am looking at the NVIDIA stock. Much better, and a good opportunity, as I say, unless it breaks that last low, about 165. All right, well, that's the 5 best for the week, and we'll take a look at the 5 worst. All right, for the 5 worst stocks for the week, we're going to start out in the brokers. I'm not going to show you all of them, but looking at Ameritrade certainly is looking at the characteristics of this very, very weak and decimated group. We were looking at these stocks and looking at the potential for some problems in here based on how they were acting. Ameritrade had a breakdown in here back a couple of months ago, and then all of a sudden got a little bit of a rally. Now, again, we look at cycle patterns. We're looking at the rhythms in here and really trying to understand when something is set up for a big upside move or big downside move. So you could see in here this big head and shoulders that formed right there. That head and shoulders projected to this low, and you can see that it got very close, and then the low to this cycle came, and you got a rally. It rallied into the sell zones right over here and then turned down. Now, this wasn't that bad of a situation here. It didn't turn bad until this rally came and failed and broke that low. That said to us that there was trouble all the way out into November. And this rally came, lifted, of course, by strength in the stock market, and then all of a sudden it was over with. So this breakdown really was a negative indication. We have warned all along that these brokered stocks were going to need to go to 0% interest rates. Ameritrade down about 30% on the week, 29%. E-Trade down about 19%. Schwab down about 15%. As they join all of the low-cost brokers at 0% commissions. Good for all of us. Of course, there are execution costs and that go to the exchanges, go to the governments, all that. So it's not completely free, but it does make it a lot cheaper to trade, and it does negatively affect the earnings capability of these stocks. So Ameritrade stock, you can see 30% down, by far the worst stock we've seen in a long period of time. Hewlett-Packard, HPQ, is the next stock we're looking at here, and there is a horrible breakdown. Now you can see a lot of clarity in this. We have colored phasing in this one to give you a sense for the cyclical patterns as we see them in here. The green's rising, the yellow correcting, and the red is when they turn negative and turn into this negative downtrend or uptrend. You can see these green yellows all giving you this uptrend in here, and then when it broke down, it established the downtrend. These look like channels to you, but to me they represent what we call directional components. In other words, how they affect the ideal cycles that are really reflected on the bottom. Each of this 1, 2, 3 cycles having had a rally and going red, in other words, making lower lows, and you could see it doing that right over here. This is projected to the early part of December before that low is in place. There is a support area with a major 61.8%. That's at about $15.70, which is a very likely place for this stock to go. The analysts downgrade this stock. They have lowered their targets. They're going to go through a restructuring plan and cut jobs up to 9,000 over the next couple of years. So this is a stock that is reflective of a company that is really having issues, and it's very clear when you look at this downward trend that's in here. Now the 4th cycle in a row that makes a lower low, and based on this, there's little hope for a bottom to come before the beginning of December. ConocoPhillips is kind of representative of a lot of the stocks in the category of energy. They got big upside pops right in here, as you can see, as this news came out about the bombing in Saudi Arabia. So the price went up in oil and then came down pretty sharply. This is your dominant oil pattern right over here, and soon coming down towards making a low, and then this kind of anomalous upside pop right there, and then coming down to test these lows. So we're looking for a low here in ConocoPhillips in around the middle of November. There's talk that they will be divested from Norway's sovereign fund. It's kind of a special class of stocks that are invested in that fund, and they hold a lot of stock, and so that's what the talk is in here. I think in about a month the stock will be a buy again, especially if the oil price can solidify. So Conoco, kind of representative of what we're seeing in all of the energies, down very significantly, down 8% on the week. The next one is Delta. Now, the airlines did not have a good week, and I cover some of these important groups, airlines and the financials, the banks and the brokers, in some depth, along with the industrials in Thursday's video, in which I talk about these important groups and how they look like they have another month on the downside of trouble. Delta came out and said they're warning because costs are going up, and that's interesting with energy coming down. The stock took a huge hit. You can see in here colored phasing, and look at all the green, yellow, and one tiny little red area here where there was a breakdown. So nice bullish cycle rhythm in here, and then the nice rally, but giving it all up in this cycle. The low due in a couple of weeks, we'll look for it to get down here and test this 51 area by the end of October. And then at that point, probably buyable for another upside attempt if you're an aggressive trader. So airlines really getting hurt on these rising costs from Delta, and American Airlines was down about 6% after Delta's down about 7% on the week. And now the last one we'll look at is Northern Trust, NTRS. With the banks included in my analysis at the end of the week, Northern Trust is a good example. Buckingham downgrades the stock. And Northern Trust, like the rest of the group, has about a month to decline. You'll notice this goes out to about mid-November. This is pretty much what the rest of the group looks like. And remember, banks really struggle on this low interest rate conditions that we're having in here. They borrow money, and the money they borrow is cheap, but the problem is that they can't, they have to charge low levels for their loans out there. So there's very narrow spreads, and they struggle under these conditions. So this actually was a breakdown right over here that you could see. It had a strange rally back up to test the highs, but now coming down to test the lows. Northern Trust, very representative of the group, where we think that there's another month of decline, and we'll be looking for this stock to get down into the low 80s. So overall, we don't like the banks at all for the next month. We think there's a lot of downside risk in them. JP Morgan came apart after having that big upside gain, and more, I encourage you to watch that video that I did on Thursday in the stock sectors section of our videos, of our huge video library. I'm going to say more about that video library in just a second. All right, before we get into the short-term view, there are many of you that have taken advantage of our preview period in here. We've been sharing some new content that's been, well, nothing short of amazing. Tons of great emails from a lot of people that have been checking out what we've been putting out in here. So, and we've been offering some of that for free so people could take a look at it, and then of course decide that it's beneficial to them to be able to subscribe and see this for an extended period of time. I want to take you to our dashboard. Just so that you can see the kind of things that we have in all of our level membership premium levels, especially level 2, 3, and 4, and what people really have been getting all along in this preview period. That includes this preview period, this workshop, the cycle analysis workshop that, like I said earlier in the show, there's only through this weekend that you'll be able to get that 30% discount. And if you want to change the way you look at charts forever and raise the understanding that you have of technical analysis, well, this is a workshop you must take. It's an investment that will make a huge difference for you going forward. But let's take a look at what is in our dashboard and what members have been getting in here. We're going to start right over here looking at if you look on the right there, by the way, you'll see all of our recent posts, so our members can just click on those, and if they're in that level, they're going to be getting that information. The daily snapshot that I'm highlighting right there, this is the stock index report. This has got a huge amount of information on the all of the indexes. It's specifically for short-term traders, and it is giving you information for trading, day trading, short-term trading in the S&P 500, the NASDAQ, and the Russell. On top of that, for our level 4 members, they get a live link to put that on their Thinkorswim charts, the TD Ameritrade, our preferred broker. And then for level 2, 3, and 4, we give you a link every morning to watch it on live stream. So you'll be able to see you don't need any special platform. It's just amazing. This is for level 2 members, level 2, 3, and 4, how much you get. You're also going to get our stock index report weekly outlook for swing traders, a little bit longer look. You'll get our Spider ETF review. You'll be able to get our blog posts with all of our great analysis in there. And our Market Week and Future Speak minutes. What they give you the exact places to go, and you can just click on the links for anything that you're interested in the analysis I've shown in those shows. So that's the availability of level 2, which is just a ton of stuff. Level 3, we add in some important things, and that is the Slimulator ranking system. This is unbelievable. This is our analytical engine on the 84 best symbols that you can trade on stocks, on ETFs, on indexes, and on futures. It gives you 3 different time frames of condition, plus the OBI index, option bias index, and gives you our output, the condition of the stocks that we see and the direction for what we think will be the next 3 to 6 weeks. So it's amazing and just tremendous comments that we've gotten on that. Also, our trade setups, where we give you our selections for favorable setups that we see coming up on a regular basis. And you will also see our weekly top 3. Our members vote for those that we want to put our analysis on. And our level 4 members can request charts, and we put up static versions of them for our level 3 members. So tons of information, and that's for level 3. Level 4 gets our charts live on your thinkorswim platform. You get also our market condition indicator, our option bias indicator, and some templates for stuff that we put up in some of our shows. And of course, everybody gets the entire library, level 2, 3, and 4. Over 400 videos in here. The archive for Market Week with all the analysis that we do. Future Speak, which comes out every Wednesday. Tools for Text, which has 70-some videos in there for technical analysis. I explain tons of stuff. Trader Psychology, really working on your personal issues. Stock Sectors, where I look at specific groups and trade ideas. Big Picture Analysis, where I look at, the markets and what I think is happening on the bigger picture for the longer term. Stuff about trading and traders with strategic plan, style, strategy, and plan. And of course, IRA MO for longer term and IRA traders. And then people that are in level 3 and 4 can email me right from there. So all of this library, incredible 400 plus videos for your learning, levels 2, 3, and 4. This is so much information, and I'm so proud of our analytical team and our membership team that manages the site and the membership that takes care of you, RV and Matt, doing a fantastic job putting this out and keeping up with it all. If you've previewed it, it's great. If you haven't, you can see how good the information is. We have now, you can move to our specials that we have trials for level 2, 3, and 4. These are great specials for 1 month. Write Matt at askSlim.com, M-A-T-T at askSlim.com. He's going to send you those special links, and you'll be able to continue seeing these things at a discounted price so that you can get a better feel for it. And if you haven't seen it, write to him anyway and check with him about a little peek that you might be able to get. And this is just incredible. We have grown this to some of the best content that you will ever get for traders. Also, if you're watching this on YouTube, we're going to post on YouTube those specials also, so you'll be able to get that in the information section. I spent a lot of time showing you these things because I think that they are so important, so valuable to you. I've been trading 45 years, doing this kind of analysis for about 43 years of them, and on the floor, off the floor, hedge fund manager, and of course now a teacher, an educator in media, and also trading every single day. So please do write for these specials to Matt at askSlim.com. All right, short-term view for the coming week. As I always do, I am accountable to what I say, and this week I'm going to give myself an average week of about 60%. If I find my cursor here, I'll be able to change over. I have so many screens over here around me that the cursor gets kind of lost. So we're going to take a look looking at light crude, and I'll give you an idea of some of the things that I was looking for in here. We're going to look at the daily charts because this is the shorter term. The oil market I got wrong. I thought it would try to go up, rise to about $57, and then back off some more. There was no rally in here. I mean, it was just so incredibly weak. And here is that light crude chart. We're seeing in here these rhythms that we thought we'd get a modest rally and then come down and hold some support, but you could see this breakdown under this level right over here. So that's going to mean that it has a lot of work to do before it can do anything positive. We'll be looking for this week for it to start to get a upward rebound. So we're going to call for an up week. Now, note momentum. Momentum is turned negative in here. That's going to mean it's going to have a hard time getting up. If you look at the middle of the slim ribbon right over there, that's coming down to about 54.5 right there. Here's your area of the bottom of this right over here, about 55.5. So 54.5 to maybe 56 is kind of an upside target in there. But it's not really a pattern that I would get real excited about because of that negative momentum, and that is suggestive of trouble holding rallies right now for the short term. So we're going to look for an upside week, and with that negative momentum, it's really going to have a hard time holding any rallies in any significant way. So that is a look at light crude. Now the gold market we got pretty correct. We had seen the range in here that we expected it to move in. We thought that it would kind of chop around and move down with some downside risk, getting down to as low as 1471. That was our target. This low right over here, 1464. So it broke just kind of below the range and then popped back up into it. Notice the slim ribbon, how skinny this is. This is chop. It's turned negative again. However, it's not very decisive. It's slightly negative. We're going to look for the next few days to follow this cycle pattern right in here. So with that, these dashed ones you're looking at here, it's the silver pattern. You could see that silver and gold are out of synchronicity. That's what we call. So there's a lot of chop that we see in this area right over here. And the ultimate corrective low in the intermediate pattern is really out towards the end of the month. So we still see this range in here. So we're going to look for another dip in here, maybe test the area of 1470 to 75, and then try to get up again. Not really excited about gold and silver right now. That time will come in about a month where we're going to start speaking more bullishly about them, but right now not so much. We're going to call this a small week in this slight negative momentum where it might dip first and then come back in the gold market. The next thing we're going to look at is the dollar market. Now the dollar is starting to show signs that it's got some problems. I've made comment in the Future Speak show on Wednesday, which many of you saw in our free preview, that there's been a interest rate compression going on. That's the U.S. rates coming down while the rest of the world rates kind of holding, and that is negative for the dollar. And all of a sudden, the Bank of Japan came out and indicated policy change, where they're going to be doing less QE, and that's an indication of it really changing in a significant way. That's going to be bad for the dollar and good for the yen. So we think that the dollar has peaked, and you can see that that's called a dark cloud cover, that highlighted area right over here. We think that is the peak, and it's likely to be coming down. So we're going to look for a down week this week. Now you can notice in here, momentum turned positive right there. And though it was choppy, it stayed positive through this whole period, and it remains positive now. Now, the projection oscillator is oversold, which says there's some internal correction going on. That says to me that before this will continue to the downside, you might get a little bounce in here. Remember, we said gold moved down for a couple days. Well, they move inversely, so we would think that maybe we get a little pop in here into this white space, but then accelerate to the downside. We're going to look for a down week in the dollar, and getting down, testing to around that 98 area or a little bit lower in the next couple of weeks. You note that's not really bearish. There's more bearishness out in that next cycle over there, but we'll talk about that in another week or so. The bond market we got wrong. So we got gold and the dollar and the stock market right. We missed on the bond market and the light crude market. The bond market, we're looking at 30-year now, is just a tower of strength. this getting up into this upper sell zone, which we really did not expect it to be able to do, to the top of it right over there, and it might actually be able to get up and test these highs at around 166.25 before it does turn down. We're going to look for a down week. Now, again, see the skinny slim ribbon right over there. It's turned slightly positive, and it might not be enough. We'll see if the slim ribbon can start widening in there on the upside. We think it's going to have maybe a few more days up in here and test this area, but then begin to roll over. So we're going to call this a move to the down, a small week likely, but that reversal's due, and with a 3.5% unemployment rate, well, there is something so out of whack in here, it's unbelievable. Either that unemployment rate is a lie, or the market is anticipating a huge surge in that unemployment rate. Maybe the Hewlett-Packard is, with their 9,000 jobs getting cut, and maybe with the banks all struggling, maybe that's what the bond market is saying, that that 1.7% growth is going to get lowered again, and the 3.5% unemployment rate, well, maybe that's going to be way different out there. Bond market, a tower of strength, and we're going to look for it to roll over, give us a small down week, but this upward momentum resumed is likely to keep it from getting too far on the downside when it does reverse. I don't see much more upside, but then again, I don't see a lot of downside at the moment now. We'll see if it begins to follow what are the ideal patterns that we have drawn in there and turns down maybe a week from now to the downside. So the stock market did what we thought it would do, and we had projected S&P 500 to break down to about 2916 or lower, we said, and it broke down lower. It fell quite a bit, and now it's gotten a big rebound. It had that big 115-point drop, now has rallied back about 40 points from the low in a blink of an eye on this hope and the talk that something good was going to come this week out of China because Trump has an open mind. Sure he doesn't. So let's take a look here at the S&P 500, which we're going to say is entered into a problem area. Remember that we thought that implied volatilities would jump, and they did. Now implied volatilities are pulling back, but interestingly, not that much. Take a look at this pattern in here. So what happened in here is that these cycles are running, these dominant cycles right there are running about 18 days. The minor cycle right in here are running about 9 days. So that's the cycle harmonics that we have in here. This low that came in here was on the 17th day, and it turned up. It was usually when they're going down, they run a little long. In this case, it had sold off so hard that it wanted to rebound. Now, you can see where the rebound came. Now, these two rising phases are what we're in right now. The next period of risk is out over here. So this is about maybe 4 days from now before it turns south again right there, and then big risk out over here towards the end of the month. So it's gotten right up here to close to the 50% retracement on the upside, and we believe that that is about the best you're going to see in here. There may be just a little bit more, as you could see us projecting here for a few days, but then we think it's going to be heading down again. It came down, hit this support area right over there, which is from the weekly chart, and then gave you a rebound. So day and a half, 2 days up, it might have a little bit more in here on the upside. I've got some emails yesterday saying, well, was this the low on that big tail? And my response to him yesterday was, well, it's possible, but not probable. Well, because it was a little short in time, then when you get this day in here, then it's absolute. So sometimes we have to wait for the shape of the market to tell us the condition. So with this big decline right over here and the intermediate pattern so weak, it says to us the probability of failing here and going into another free fall is very high. Resistance right over here about 29.40 to about 29.60. That's where we think it's going to hit a wall, and then be moving to the downside again. We're going to call for a down week in here, and then with the risk growing right into this period here, then you might get another little rally depending on how hard this rebounds right in this area. And then this period of the final week and a half or so of October really look like a really negative period. So all this period of chop right in here in the resistance zone, and then likely moving down very sharply. Note that momentum has turned negative right over here. Now, the momentum has been kind of choppy during this long period of time. These swings have been pretty large for the market. Now, it turns negative again. Now, when the momentum turns negative and then the projection oscillator gets overbought, that is a sell warning. So you can look right over here where it turned negative right over here, and then the projection oscillator got overbought, and then the market got creamed. When the projection oscillator gets oversold in an upward trending positive momentum, those are buy signals. Buy them, they work. Sell them, they work. And you got hit big. Well, that's what we're getting to. In about another day or so, this is going to start to get overbought. It's going to have digested the very micro oversold condition, and then be in condition to be moving to the downside again. Maybe it will be all about the fact that the trade talks, which I think are going to go nowhere, because I don't think China wants to give in to Trump 1 inch. I think that maybe that might be what sets the market off to the downside again. So next early part of next week is when the trade talks begin. And that's after that, again, the risk is pretty good. Could there be a deal? Well, I guess they could put some kind of a crummy deal together that they could both say that they're winners, but I don't think China wants that. I actually think China wants Trump to have a hard time, and they want to say goodbye to him. So I would say that there's probably not a lot of hope for a deal in here. And based on what Navarro came out and said, he said that they're not going to take anything but a great deal. I mean, they're setting us up, I think, for the likelihood that there will be no great deal in there at all, and probably no deal. And we think that the stock market's going to head down again in a big way in this month. That's it for Market Week. I hope you thought there was great information in there. Please sign up if you're not signed up for our special memberships and get a look at everything we have going on in here. I want you to be so careful. It is so crazy out there. I'm always wishing you great trading.
Well, I'm going to sit and I'm going to do a silly show.